I'm taking advantage of a short-term pocket of volatility.
In a big picture uptrend.
Yeah, in a bigger picture uptrend. So
today is going to be a great day because we have the computers out, we're sharing screens, and we're going to be diving deep into a strategy with my man Dawson here. And he's going to be going over an overextended mean reversion play.
these VWAP pops, sometimes they work pretty well.
Yeah.
But also there's nothing saying that this isn't gonna continue to grind and go back to highs. I'm doing like a top-down approach. I'm looking for something that's overextended on the daily, and that's giving me a bias coming into the day. And then I'll go down to like an intradaily, like a 15-minute multi-day chart or an intraday chart, and those ones are telling me how to trade that bias that the daily gave me.
What I'm curious about, is there any things new traders should look out for if they're going to try anything close to this type of strategy of playing these type of plays?
Yeah, I used to make the mistake of like,
Wow, this number really blows my mind. Over 75% of you who watch the show regularly are not subscribed. If you enjoy the show and want to support us, the easiest and also free way is just to hit that subscribe button. This will help us find new and better guests, and I promise you to continue to work at making this show better and bringing you more value. Welcome back, everybody, to Be the Trader. Today is going to be a great day because we have the computers out, we're sharing screens, and we're going to be diving deep into a strategy with my man Dawson here. And he's going to be going over an overextended mean reversion play. Dawson, take it away, brother.
sounds good. Yeah, I'll start off here with the daily chart because I'm doing like a top-down approach. So I'm looking for something that's overextended on the daily, and that's giving me a bias coming into the day. And then I'll go down to like an intradaily, like a 15-minute multi-day chart or an intraday chart, and those ones are telling me how to trade that bias that the daily gave me. So when I'm looking at a daily chart, I'll be using like an RSI or something to gauge if it's like 80 or 90 plus RSI, shows that it's overbought. And then this green line here on the daily is the 4 exponential moving average. So the further it gets from that EMA and the higher the RSI gets, the more I like for those mean reversion opportunities. So this one is SMCI here that I have on the screen. So from its prior breakout level here in the 40s, and for the past 4 days, it's gapped up, gapped up, gapped up, hasn't gone red in 4 days. You get this volume starting to capitulate to the upside. And
Is that a requirement for you? You must get that volume?
like volume picking up and then price picking up as well. So you want to see them both starting to go parabolic, because you're getting like this massive exchange of shares into the top end. So when you're looking for like this first red day, like mean reversion, I want to see as many people on the wrong side as possible, so that any pops are bag holders selling into each pop, puts the odds in the favor of the short seller. So the more sellers you can get on your side, if they've got paper, if they've got dilution on their side, if you've got bag holders from recent resistance, if you've got shorts coming in, they're all different categories of sellers that I like to see when I'm looking to short something like this. They did have a catalyst coming into today at 1 o'clock, so that was playing into it as well. Not only did we have parabolic, but possible sell the news event as well. So what I was coming into today, so something like an intradaily here, you can see kind of how it grinds each day. Morning strength grinds, and what was different yesterday was week open, starting to grind, and then starts to rip and go parabolic.
Yeah.
Like you can see the difference in price action from each of these prior days to this. So now longs are starting to chase this thing. They're buying into the upper end of this daily chart range. And then late day, there was some news that came out on this, completely tanked the stock. So now at this point, I wasn't looking to get overnight on this, but now I'm looking for pops. This was today, February 20th. So I'm looking for pops back up into prior day's resistance and looking to get short on those, covering a weakness. So I'm typically drawing key levels. So I've got this one here in the mid 55s, was prior day's support, possible cover spot. Anything lower 52s was like max potential to me. So anything between like this 55 to 52, and then it's my job to get proper risk reward to make reward into that range make sense to my risk profile. So coming into today, we've got these prior tops here in this 61 range from big fails, bounce high, pre-market high here into the 61s. So now any pops this morning using 61s as a guide, I like for a trend join for failed follow through.
I want to take a couple of seconds to say thank you to our sponsor, Cobra Trading. Cobra Trading is the go-to broker for short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. And Forbes Advisor did an exhaustive research on day trading brokers. And Cobra Trading was the only broker awarded in 2 categories, one of them being customer service. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. Look, I've experienced many different brokers, and it's why I choose to use them every single day, and I'm proud to have them as our sponsor. Sign up now by using the link below, and Cobra Trading will give you 100 days of free commission, 3 months of free software, and 33% off commission for life. Now let's get back to the show.
Then I'm going down. So now that was the intraday. So now we've gone from the daily, we've gone to the intraday, something like a 5-minute, 15-minute multi-day idea. And now I'm using the 1 minute on how to trade that bias that I've given myself on this. So we're getting pops off the open here, wicks on the top side of all these candles. Using VWAP as a guide, but I'm not sized into this because I'm still using that 61 as a guide. So these are starters.
What does that mean though mentally for you? Like, what do you mean by that?
Like if this pushes up into 61 in like a straight up fashion, that would be an area I'd like to react into. Now, on the other hand, if it were to be grinding and dip starting to hold 61, 61.30, something like that, and it's like steady, where if it's not like a speed up and exhaustion into it, if it's buyers have now absorbed this week open and are continuing to buy dips, it's still a bullish daily. I'm just looking for a short-term pullback. You can see even zooming out on this week open got bought right back up.
Yeah, it did.
Like it's still right back up near highs. So daily chart wise, it's still bullish, but I think there's just an opportunity that longs are getting exhausted and there's a pocket of selling pressure that might hit this off the open. So for me, using 61s as a guide, if it were to go straight up into it, that'd be a level I'd like to react into. So I like to keep size under control so that I could react into something like that. Otherwise, I'm going to wait for some failed follow through where prior resistance starts to become support, and then that support starts to get taken out and starts to roll over. So my plan on this one was I put position on this morning. I wasn't full size here, so I added to it through low a day, 1 minute opening range lows. And that was with a stop on 61. Wasn't a hard stop. Like I say, I want to be able to react to it, but I was sized over under versus that level. We get a little pop up into it and volume speeds up a little bit, fairly close to the opening volume bar. So I'm thinking we might be in a situation where this is exhausting. This is the morning strength that's going to start to fail. So we get these couple dips right through here. And that's the failed follow through spot. So once this starts to fail mid 58s, I'm thinking game on. And now I'm looking for covers versus prior support. So I have a starter, I have a scale. Now I'm risking more towards highs. And now covers are towards prior lows, towards those other lines looking left. And so just taking profits into profit targets. And typically on these, I tend to get in trouble when I start shorting all bounces because like I say, like I'm taking advantage of a short-term pocket of volatility.
In a big picture uptrend.
Yeah, in a bigger picture uptrend. So when I
forget that sometimes.
Exactly. So like these VWAP pops, sometimes they work pretty well. But also there's nothing saying that this isn't going to continue to grind and go back to highs. So I decided not to. I'm still working, like that part of the strategy is still something I'm trying to develop.
On days where it is on days where it is reversing on the big picture though as well, that shorting into bounces could be more applicable.
Yes. Yeah, that's right. And especially on like smaller cap names, cheaper names, SMCI, bigger market cap. It's a real company, so to speak. So
there's bigger fish in that.
Exactly. When I'm shorting like a $2 name, I think those ones are going to end back up at 0. So I'm a bit more I'm looking for bounces on stuff.
So what I'm curious about is, I know people are going to watch this and they're very curious on your sizing against 61, but then when you finally start to get the turn, are you sizing now off of high of day? Like are you doing that, or are you still sized off of 61, but just moving your stop to high of day? Like how are you doing that?
Yeah, this last arrow here would have been more than a 1R off of 61. So this ad here, I was anticipating that failed follow through. It started to stuff up into there. That's more of like a level 2 tape, like in the moment kind of thing. When you're getting like off the open and these ones are stuffing and stuffing and stuffing, but it's not continuing to go lower. So I'm not looking to add any more here.
Right.
But now we get a straight up move of over $1. And with the bigger picture, this thing is red for the first time in 4 days.
Yep.
That
Where's red green at this moment? Do you remember, or does it show?
Let me see here. I could get prior close 60.25.
Oh yeah. So it was red at the open.
Yeah.
The open gap down. I could barely see it.
It was gapping down. Yeah. Right there.
Okay.
So this line here was red to green. So typically,
I see it.
Overextended gap downs, you get pops versus red to green. That as long as they're red on the day, sellers are typically in control. So this was a pop using more red to green as a guide. If it started to build over high a day, I wouldn't have stopped, but I would have sized down and then still looked for that 61 exhaustion.
How do you size when it comes to spreading out your entries like you did?
Yeah.
Is there any advice you give for new traders who are trying to like size into things?
If I'm looking to size like something that's working, going in my favor, something that's continuing to make new lows, I might be using prior day's highs, and then once I feel comfortable using high a day, then add and use the same dollar risk off of a new risk level. Maybe that continues, then can use a different bounce high and start to pyramid into that position. This one was
but
a bit.
Keep your risk dollar the same.
The dollar risk the same.
The reward gradually.
Exactly, because now you're getting more size as the trade is working, and it's continuing to go in your favor. But then I'm also quicker into taking profits because you're pulling your average a lot lower to where the price is. So any pops back, I don't want to be emotional into those pops. So if I see any sort of turn, I'm proactive into those pulls, and then I want to see pops start to fail again. SMCI was different because it was gapping down so much. It was down like 4% or so this morning. So I needed some sort of shove in order to position into that idea. So I wasn't having the bounces and lower highs to scale into.
Right.
So this one was a find a set risk and size into that with 1R. And if it starts to fail, then maybe move risk down to highs. So by the time this is failing, I'm probably at like 3/4 of an R off a high a day, and I'm probably like 1.5 R off of those 61s after that final ad. But it's an A grade setup, so I'm comfortable risking a little bit more.
Because the odds are really stacked in your favor.
This is like a 72 to 75% win rate from what I've tracked.
What I'm curious about is there any things new traders should look out for if they're going to try anything close to this type of strategy of playing these type of plays?
Yeah, I used to make the mistake of like getting excited, like ambitious off the open.
Yeah.
Like, oh, this thing's red, like not waiting for a proper entry. And then you're screwing your average, you're not waiting for pops. So now your risk reward is off. So over the long run of trading this particular setup, your risk reward will be skewed and it actually isn't profitable. If you're just hammering open on a lot of these things, you're going to be emotional into those pops where I like to react to. And then like if you're hitting open at 57 and covering 55, but if you're hitting 57 risking 61, you've got $4 of risk.
Right.
And potential reward is this 55 range.
Right.
So the risk reward is skewed. So that was definitely a mistake I made, was not waiting for a proper entry, being okay to miss it. I've missed countless A-grade opportunities. So for me to miss another one, there's another trade coming around the corner.
Yep.
So I think that was the main thing I had to work on personally.
Well, look, man, I know people are gonna want to see more of this stuff or maybe learn more from you. Is there any place they can learn more about you?
A lot of times I'll hop on like IU on their morning broadcast if they need some extra guys over there. A lot of times my watches are a lot different than the other guys that are on the broadcast,
Yeah.
so I bring a bit of a different lens. And then I go over my watch lists every evening preparing for the next day on a YouTube channel. That
It's your YouTube channel,
yeah,
right?
Dawson D22
Cool.
is the tag on that.
We'll link that for sure on the bottom. And you are on X as well.
I'm on Twitter, yeah, D22_123. That's like all my trading stuff. If you want to reach out or whatever, I'm happy to chat with anybody on there.
Cool, cool. Well, look, thank you so much, my man, for being here today and sharing this strategy and showing how you sized it and explaining what the big picture needs to be along with the volume and you want to see some exhaustion, but also explaining that even though you're going to play this temporary pullback, like always remember the big picture as well. So I really appreciate that. And I know tons of people are going to get a lot of value and want to reach out. So thanks again, my man. And have a great day, brother.
My pleasure.
Thank you for finishing today's episode. If you're watching on YouTube, please leave a comment below of one of the takeaways that you are going to implement into your own trading. And if you happen to be listening on a podcast platform, go ahead and leave us a review and let us know what you enjoy about today's episode, because that does go a long way in helping us continue to grow. Again, thank you from the bottom of my heart, and I look forward to seeing you on the next episode.